All right. So we have looked at that. And then what I did with you yesterday was a literal way of identifying the trend. Okay. Now we want to look at a more technical way of identifying the trend. Now there are some characteristics of the market that suggest that a particular market is in an uptrend or is in a downtrend or it is ranging or it is choppy. Okay. So today we want to look at these technical aspects. Okay. That's what we want to look at. All right. So I will deal with the trending market and then maybe I'll touch on the ranging markets and then that will be that for the evening. Remember, we did something like this yesterday. I said that the normal circumstance, we expect to see an uptrend to behave like this. Okay, we expect to see an uptrend to behave like this. So by the end of this meeting, at least you should be able to identify the trend of every market once you see it. You should be able to identify that. Okay. If you're able to do that, that's enough. Although I'll show you how to, buy and sell and all that. But if you're able to identify the trend, that is enough. All right. Good. Now, when the market is doing this, you see it is repeating some kind of pattern. It goes up, then it goes down, goes up, it goes down, goes up, and then it goes down. Now, the upward move that happens, okay, we call that the higher high, okay? So the point where it gets to before it reverses or before it starts going down, that is called a higher high. And the higher high, we represent that by HH, okay? Higher high, okay? We represent that by HH. And then this is known as higher low. Okay, higher low. Now, so it means that this is also a higher high, right? So it went up, this is a higher high, then it went down. This is a higher low. So a higher high, a higher low, a higher high, a higher low, a higher high, a higher low. So that is how an uptrending market moves. Higher highs, higher low, higher high, higher low. So if I ask you that, what is the trend of a particular market? If you tell me that it is an uptrend, I'll ask you why. Then you tell me that it is because the market has created series of higher highs and higher lows. Once you're able to see that, then it is a clear uptrending market. Okay, higher highs and higher lows. Okay, I mean the peaks are the higher highs and then the bottom are the higher lows. It is important we understand this. Okay, it is important that we understand this. If you have any question, put it there. Put it somewhere. When I'm done, I will give you the chance to ask your question. Okay. So this is how an uptrending market moves. This is how an uptrending market moves. Okay. I'm going to delete it and then we'll look at a downtrending market. So yesterday we also saw that for the downtrending market, we are likely to see something like this, right? We are likely to see something like this. So it is just a reverse of the uptrending market. So it also does something like this. So unlike the uptrend that we have higher highs and higher lows, over here we have what we call lower lows and lower highs. Lower lows and lower highs. So we have a lower low and then lower high. Okay. So it means that the peaks here are lower highs and the bottom are what? Lower lows. The opposite of the uptrended market. Okay. So we have lower low and then lower high. Lower high. So it keeps on forming the lows and highs as it drops. So once you are able to identify this in the market, then we say that that particular market is a downtrending market. It is very important we know the lower lows and the lower highs because we are going to use them to do the analysis, the actual analysis. We are going to use this to do the analysis. So it's important we know the difference. Okay. All right, so let me take this down and then we look at the ranging market. So yesterday I mentioned something about the ranging market. Um, so the ranging market, it also forms what we call equal highs, and then equal lows. So you realize that all the highs are almost around the same price. So we call it equal highs. So we use, let me put this line here. We name this as equal highs, equal highs. Okay, sorry, sorry, equal highs. Yes. And then the bottom, we call that one equal lows. Okay, equal lows. All right. So what we mean is that all the highs are aligning around the same price. It's not always the case that it will be the same price, but you see that the difference isn't much. And then most of the highs are around the same thing. Okay. So you see this in here, and then it's same as the lows. When you're able to identify something like this, then this is what arranging markets. This is the characteristics of what arranging market. So the same way, if I should ask you the trend or the structure of a particular market and you tell me it's a ranging market, you should be able to go on to tell me that it is because the market has printed series of what? Equal highs and then equal lows. I want to believe that this is clear. So now let's go to the chart itself and see if we will be able to identify the trend. And then we will go on to see where the highs and the lows are. Okay, right. So what I have on the chart, according to what we learned yesterday, I want to believe that all of us know the trend of this market. If you don't know, no problem. I believe that at the end of this lesson, you'll be able to identify the trend. But then from what we learned yesterday, we said that if we see the price moving from lower region, like something like this, into an upper region, then it is an uptrend. That's a layman way of what defining an uptrend. Today, we have learned that if we see higher highs and higher lows, then it is an uptrend. So this, what we have on the chart, is an uptrend, and I'm going to show you why it is so. Because I can see a higher high here. When I start from the bottom, I can see a higher high here. Then I see a higher low here. Then I see a higher high here. I see a higher low here. On and on it goes. I see a higher high up here. Yeah. And then a higher low down there. And then it keeps on going. So this is our current high. This one. This is our current high. So we are waiting to see what will become of it. But we can see a higher high, a higher high, a higher high, and a higher high. Now, the reason why they are called higher highs is because this is a high point on the chart. But if you compare this one to this, the price here is higher than this. So it means that all the highs that are forming, they are higher than the previous highs. That is why we call them higher highs. So this is a high, all right, but this is higher than this. So this is a higher high to this. This is a higher high to this one, and this is a higher high to this one. I want to believe that this is very clear. This is why we call them higher highs, okay? Right. So we have been able to identify the levels, okay? So I'm going to add something to it. Now, there is not just important that we know the higher highs and the higher lows. We are going to use them for our analysis. So look at what I'm going to do. I'm going to pick a line, then I'll put it at the first high that I marked. Okay, I'll pick another one, then I'll put it at the second high that I marked. Then I'll pick another one, I'll put it at the third high that I marked. Then I'll do the same for the last one. Then I'm going to take out this, and then we'll be left with only this. Okay, we'll be left with only this. Now, what I have done is that I have marked my support levels. I have marked my support levels. Okay, so when you are able to identify the higher high, okay, put a line there, and that line becomes a support line. Okay, it is very important in our trading journey. Now, the support line is where we are going to buy from. I repeat, the support line is where we are going to buy from. So normally, after we identify this high and then we marked it, all we will wait for is for price to go over it. And then when it comes back to it, we will take a buy from here. And then, you can target this level and then you leave. And then wait for it to break this level, come back to it, and then you take another buy. Okay. That is how we are going to buy. So in an uptrend, once we identify the higher highs, we are going to mark them as support levels. We will wait for markets to revisit the support levels that we have marked. In trading, we call it retest. When it breaks the level and then it comes back to it, it is called a retest. So upon the retest, that is when we are going to enter a buy in an uptrend. That is where we are going to enter a buy in an uptrend. Okay. Again, I don't expect you to understand this right now. Over time, you will get it. But I just want you to get the idea. One, you should be able to identify the structure. If you are able to identify that this is an uptrend, go on to locate the higher highs. When you see the higher highs, mark them as support levels. Then you wait for the market to break the level, come back to it. When it comes back to it, then you take your buy. This is what I mean by a break. As it stands now, this is our current high, and the market is at the moment below it. So what we wait for is for price to go through it, and that becomes the breaks. That's the definition of the break I'm talking about. Then we wait for it to come back to the level, and then we will take a buy and expect that the market will continue to push up. If this happens, then we are going to make money. If it happens this way, we are going to make money. If it doesn't, then we are going to incur a loss. Okay. But if you practice this over and over again and you become better and better at it, you should be able to get most of the analysis correct. Okay. This is our first analysis. So, like I said, if you don't get it, no problem. I'm going to treat at least 3 examples on each of the trend with you. So, this is a first example. Let me delete this and then look for another market. Before that, I want to make sure that we are all on the same page. Are you there and can you hear me? Do you have any question for me so far with respect to what I am showing? Okay, so someone gave me a thumbs up, meaning that you can hear me correctly. Okay, thank you. So let's go back to the chart. Right, so I'm going to identify a different markets and then we look at that one. Okay. So we are going to identify the structure. We should be able to tell the structure of this market by identifying the levels, okay, the highs and the lows. So I want to deal with only this part of the chart, just this part of the chart. Now, when I look at this, I know that it is an uptrend. And the reason is I can identify higher highs and higher lows. I want to believe that you can also identify that. When I'm done with the presentation, I will ask, I'll do a little assignment with you. Like, I'll just put the chart on the screen and then you tell me the trend. Okay. All right. Now, from here, I can easily identify the higher highs and the higher lows. I can easily do that because I have done this for a long time. So once I see it, I'm able to identify it. Okay. Once I see it, I'm able to identify it. So once you practice this and it becomes part of you, you'll be able to identify it with ease, just like I am doing. Yes. So it's no magic. It's just constant practice that has. So as it stands now, this is below this. So this is the current high. We would expect that maybe this will break it high, further so that will become the immediate high. Okay. I'm talking about this. But as it stands now, this is the immediate high on the chart, this one. Okay. So we've been able to do this. What do we do next? We are going to place our resistance levels. Okay. We put them at the highs that we marked. Okay. The highs that we marked. So even with just this strategy, if you are seeing right, then you should know that you would have made a lot of money from Euro USD because the market just obeyed the analysis. it obeyed the analysis. All right, then let me take this off so that we'll be left with only the support levels. Excellent. So I was able to identify that it was an uptrending market. I identified the highs and then I marked them. Now, this was my high. Market broke it and came back to it. Ideally, I would have taken a buy from here. That's why I said that if you know about this strategy, you would have made a lot of money from Euro USD. If you miss this one, no problem. You find this high, you mark it, wait for price to break it. It did. It came back to it, and then boom, it went up. So you could have what? Gotten an entry from here. Same way, this is a high. Now it retested this and didn't buy right away. It went against us before it finally went up. So we will teach you something about risk management. When the prediction doesn't go in your direction, what do you do about it? Okay, we will teach you about that one as well. Right, so we have this high too. We have this high here, and then like you can see, market broke it and then came back to it, just like the other example. It didn't buy right away. It dropped to a point before it finally went up. But then you can see that even applying just this technique that I'm showing you, you could have taken an advantage of the buy market from here, and even from here. All right. Yes, so this is um analysis on the Euro USD. Okay, so I'm going to do the last one on an uptrending market, then we will look for a downtrending market. Okay, so you can see that this is also in a clear buy structure. It's beautiful. It is beautiful, very simple. Now let's look at something. This one, I'm not going to mark the levels. I'm not going to point out the highs and then the lows. I'm just going to mark it. This is because I can easily spot them because, like I said, I have done this for a long time. So once I open the chart, I'm able to locate my highs and then I mark them and then wait for price to retest and I take my entry. Okay, I take my entry. It is very easy. It is very easy. And it is my prayer that those of us who put in the efforts by the end of the lesson, it should become as simple and easy like this to you. Okay, so very simple. I found a high here. I marked it. Price came to it. Boom, it bought. A high here. I marked it. Price came to it. Boom, it bought. So just look at it. I would have gotten an entry from here, an entry from here. This one didn't come to my entry. So I've missed this one, no problem. It gave us another entry here, and then boom, it came to it, and look at it, beautiful buy. So I would have gotten three entries. Currently, we are waiting to see what will happen. Either market will break this, and then upon a retest, we continue to buy, or we'll wait to see what will happen next. Okay, so this is our third example on an uptrending market, and then how we mark the support levels. Remember, we are marking the higher highs. We are marking the higher highs. Okay, so that is that um, for the uptrend. Let's see for the downtrend. Let me go here. Yes, because I have. I'm going to load this again. I want to identify some markets that are trending downward as we speak, so that we can look at how we are going to mark them too. So for that, I am using the Deriv synthetic indices. Okay, I'm using the Deriv synthetic indices. Right. So let's analyze this part of the pardon me. Yeah, so we are going to analyze this part of the charts. Okay. All right. So I can see that this is a clear downtrending market. And just like I showed you, it does this, it drops down, then it goes up, it drops down, then it goes up, it drops down, it goes up for the downtrend. Drops down, goes up, drops down, goes up, drops down, goes up, drops down, goes up, like that. Okay. It keeps on doing that until the move is over. All right. So now these are your lows, lower lows, and then the lower highs. It is the lower lows that we are going to mark this time. Remember, in an uptrend, we mark the highs. All right. Here we are going to mark the lower lows. So I'll mark this, then I'll mark this, then I'll mark this, I'll mark this. So where I got the lower low is what where I am marking as my new levels. Okay. And remember, we said that the levels we marked in the uptrend were support levels. Here, the levels that we are marking are what we call resistance levels. These are resistance levels. So the key takeaway from here is that we buy from a support and then we sell from a resistance. We buy from a support and then we sell from a resistance. Don't ever forget this. Okay. So look at it. So I marked my levels. A break, market went to it and then it sold. Broke it, went to it and then it sold. Broke it, went to it and it sold. So you see that the technique actually played out a number of times in the past. And we can follow this for as long as the market continues in that direction until it changes direction. When it changes direction, then we switch the analysis and we go in the other direction as well. So that is how we are going to do the mark. And for now, the emphasis is on what identifying the lower lows and then marking the resistance levels. I want to believe that this is clear, it's not confusing. I really want to believe that it is so. Okay. Now let's look at another market. We want to do at least 3 for this. So this is an uptrend. I want downtrending markets. Okay. So this one. Okay, so this is a downtrending market. I want to use this part because it was very clear so that we will understand it. Okay, let me zoom out. Right. So I want to use this aspect. Good. So you can see that went up here, came down, went up, came down, went up, came down, went up, came down, went up, came down. So if you remember the bullish candles and the bearish candles, you will see why I'm saying it went up and then it came down, it went up, it came down. That was why we treated that yesterday. We said that the bullish candles go up. It starts at a lower price and ends at what? A higher price. It means that it goes up. All right. And the bearish is the opposite. That goes down. All right. So it goes down means that from here, we were seeing bearish candles. I mean that going down here means we saw red candles. Going up, green candles, right? Red, then green, and then red. Okay. So the same way, we are going to mark the lows or the lower lows. Okay. We are going to mark the lower lows, and then they are going to constitute what we call the resistance levels. And the same idea, when the market breaks it and then comes back to it, that is when we take the sell. When the market breaks it and then it comes back to it, what's the time? Okay. That is when we take the sell. Okay. So I'm going to take this off. And then leave this there. Okay, so this is going to be my levels, and then I'm going to wait to see what happens. And then you can see clearly from here, when it broke it, retested, and it sold, this gave you good money. Broke it, retested again, it sold, good money, retested, it sold, good money. So you would have made a lot of money from this if you knew about this analysis. Okay, if you knew about this analysis, you would have made a lot of money from here. Okay, so this is the second example. So I would like us to look at the third example. Okay, so I want a downtrending market. This market sold for some time, so I think it's in the past. Let me locate it. Okay, so before I touched on the downtrending again, I have seen something here that I want to. Okay, don't worry, I'll come back to it. Let me finish with the downtrend. I'll come back to this. Okay, so I want, yeah, there is another downtrend in markets here. So it was very clear. Okay, so the same way this time around, I'm not going to do the arrows again. I'm just going to mark the level because I know my lower lows. So it's as simple as that. That's how you identify the levels and then you mark them. Okay, and you see how price reacts to it. So let me point this out. It's not always the case that when the market retest is going to sell right away. That's why I said that we will tackle what we call risk management. You know, we will talk about something we call stop loss and take profit. So every trade that you take, you have to put a target where you want to take profit, where you want to cash out. And then you have to put what we call a stop loss. If the market doesn't go according to your prediction, how much are you willing to lose? That is the stop loss. We will teach you all that. Okay. Yeah. I mentioned that because you can see that from here, there was a retest here, and then it sold all right. There was a retest here, it sold all right. There was a retest here, and look at where it got to. It broke our lines and went all the way up here before it finally sold. This means that it went deep against that before reversing. So if you are in this trade, you are going to see some loss on your account. And if the amount is not enough, you may end up losing the entire money. Okay. But if it is enough, then it can hold this trade. And then it came back in profit. You would have made money from that trade. Okay. So it is not always the case that once the market retest, it's going to go right away in your direction. No, no, it doesn't happen all the time. Okay. So these are how we are going to analyze both the uptrending market and the downtrending market. Now, let me quickly go back to the 31X. I saw something there that I want to show you. So I saw an example of a ranging market. That is why I said I'll come back here. So for this market, at some point, it was ranging before it finally continued the sell. So look at this. You see that it has some equal highs here, up here. You see that it has some equal highs here, right? And then we have some equal lows down here. So this is a ranging market. This is a typical example of a ranging market. So for this market, we sell when the market comes up here, and then we buy when it comes down here. So you will do that within the range. You will buy from the support, and then you sell from the resistance. So the same way, this is a resistance level. This is what a support level. So whenever the market comes down, you buy. When it goes up, you sell until it breaks out from the zone or from the range. When it happens like that, then it means it's going to continue the trend. So if it breaks out from the support, then it's going to sell more. If it breaks out from the resistance, it's going to buy more. Okay. So in this case, you start looking for more sales. Okay. So that is it. Well, at least we have looked at uptrend, downtrend, and then ranging market. I think that is enough for the evening before I confuse you. Okay, so yeah, we've done almost 40 minutes. I think that is enough. I'll pause here